All right, everyone, welcome back to another episode of Line Your Own Pockets. Another viewer, listener, client question come in about timing. So I'll let Dave just kind of take it away, talk about, get a little bit more detail of what we're going to chat about today.
Yes, this came from a trader I work with named Isaac. And he asked us a very simple question. How much does timing matter? And he brought this up in the context of, very small time frames, execution times versus signal time, tick data versus 1 minute bar data. How much does that matter? So just in general, and longer time frames too. But I think it's a good question. There's a lot here to go over, I think.
Well, and I'm glad off the bat he specified that he was talking about shorter time frames because that's like the easy, I think, uninteresting answer is that um, the longer your time frame, the less this stuff may matter. You know, if you're trying to make a penny on your trade, if you're like an HFT system, then obviously it's going to be very, very important. And just for the other extreme, if you're a long-term investor, buying the S&P 500, you don't care that you missed 10 cents here or there. So that's good so that we can focus, because that was going to be a lot of my contribution to it. Is I look at it a lot when it comes to how long am I planning on holding, is that's how much those edge cases in the long run will affect, which also is, I guess, the amount of times you're turning over your portfolio, right? That's the real answer, is that if you're trading infrequently, it doesn't matter. If you're trading super frequently, then little small slippage kind of areas and time frames will add up over time.
Yeah, well, I think that is. You said it's uninteresting. I think it is pretty interesting. And then you're exactly right. The longer your time frame, the longer your hold time, the less important these things are. So it's a range, and it doesn't go completely away as you get longer, because there's still something there um, to worry
But
about, but
yeah,
it's just less important.
and to specify, I just mean that I'm more excited to get into the nitty gritty,
Yeah,
focusing on that short term time frame, because if he came to you and that would have been my first question. He said, "How much does time frame matter?" He's like, I have a monthly rotational system that rotates my system monthly. I'd say, "Whoa, what do you care, right?" As long as you're not taking insane slippage, it's a rounding error, probably what it is. But that's why I think it's interesting. So so the audience knows, we're almost specifically talking about, right, day trading and short term trading. This is where you really, I think, have to be more laser focused on execution and slippage and things like that, because it will add up huge in the long run if you're not paying attention to it.
yeah, for sure. And there's a whole range of strategies where it's more or less important.
Yeah.
So even for some very short term strategies, it doesn't. The timing is going to be less important than others, where it's going to be absolutely critically important. Like, the most important thing about the strategy is going to be the timing and the execution time.
So yeah, so let's just, when he's talking about timing, maybe just define a little bit more what he's talking about. Is he talking about timing of, the amount of data for back tests, or is he talking about slippage from like signal to execution, or where is he focused on timing being the most important?
Yeah. So he uses Ammon Broker. He
Hmm.
uses Ammon Broker to generate signals in real time and trade them. Um, so my assumption is there's basically two types of traders that ask me this question, that are two sort of different topics they have in mind. One is what you said, like the delay between the signal and the execution.
Right.
The other one is, and it's somewhat related, where they're back testing on minute bar data, and they have in their mind that, okay, if I can get a smaller time frame and back test on that, then my life will be good, right? Then my
Yeah.
problems will be solved.
Yeah.
So in both of those cases, there's a cost benefit analysis to look at, and uh, certainly in the back, I think it's good to think about this in. back testing versus live. I really love to separate those two worlds because back testing timing is not of the essence, right? It doesn't
Mhm.
really matter that much how long your back test takes. Um, it's and then when you get trading live, it's going to be a much more important thing. And those are very different contexts, and they have very different skills required to do those well. But I always tell people to start with the back testing first. Um, you'll have a larger database in Amabroker if that's what you're using, and get the strategy. Get a good looking equity curve that you can believe in, and then you'll be so excited and you'll be ready to jump through whatever hoops are required to get the real time stuff working, which is going to be, like I said, it's a completely different skill set. It's a completely different context, but both of these are important. But really, the most important thing is get a strategy that looks good that you're excited about, and that's going to provide a lot of motivation for this.
Yeah, and I saw a lot of the same, my time with trade ideas, right, where a lot of the back testing and data was run with 1 minute bars, and that's why I kind of chuckled when you said, "Okay, my life will be solved if I can just get a little bit shorter time frame." And then, I think a lot of the question has to be is just kind of like for what, right? For what is the end goal? And I always look at it that you can. I think the shorter time frame you go to some degree, the more complicated things get when it comes to uh, not only just the testing of it, because like you mentioned, it doesn't really matter. You're just dealing with data or high low open close numbers for testing, but execution, right? And this is where I think people should really look at it. There's a whole bunch of, I think, caveats, I guess, to go through before we answer this question. So you already answered the specificity, but I think the other question to ask is how is he executing, which you said Amni broker. So is that fully automatic or systematized, where it's like entry, stop loss, profit target, the whole 9 yards? Because that could be a place that I think it could really trip people up if they are trying to get too quick and they just can't do it with fully systematized. They end up building something that looks great on paper, but you just can't hit the buttons kind of fast enough, I guess.
Yeah, and that's a there is a bit of a learning curve, especially with Amabroker, to get it to run fast enough to get the signals in time to be able to take
Right.
the trades. So it's a very um, but he's been doing this a long time. He's a
Okay.
very he's got his own robot that he's created in Python. So he's very familiar with this world, and he's been doing it for some time. He's been very successful. So, um, but it is, you know, he trades the style of trading that he does is going to be less um, like timing is going to be less important. And I don't want to go into the details of the strategy he trades, but I just want to point out that there's a whole world that where timing, even in intraday trading strategies, isn't going to matter a ton. It'll matter some. Um, there'll be mistrades,
Hmm.
and that'll be the indication that timing is of the essence, and you can dig in there, and that's going to be like the most important thing to work on. When you start missing a lot of trades, and you think you can get faster and get better, um,
And that was actually going to be my next question about whether or not it matters, because I could see someone having the same time frame for their back tester, say 1 minute bars, and executing on the same system, but say someone is doing mean reversion and the other one is doing like momentum style trading, and I could see two of those having kind of wildly different requirements for speed. And for, again, for the listeners, what I mean is like someone is trying to buy a stock that's tanking, right, and they think it's going to get oversold, and this is roughly an area to buy it, whereas someone else is taking a stock like as it's breaking out to a new highs and they're trying to buy it. To me, those are two different games, and that in and of itself, timing would matter. So you're talking, same time frame for back testing, same time frame and same method for execution, but your actual trading setup, those two things are gonna, in my mind, the timing is going to matter way more, because one of them you're kind of chasing price as it goes, and the other one you're waiting for price to kind of get down to a level that's interesting to you.
Yeah, and uh, I want to contrast this with some strategies that I trade that work on tick data, where the hold time is up to 1 second. If you think
Wow.
about
Okay.
that, that's
Yeah.
that's tiny, right? Timing is
Up
going to be
up to,
absolutely
you said, sorry,
up to
up
one
to.
second.
So 1 second is like a million years for you. That's the maximum amount of time it can.
And that's a very specific kind of strategy that I trade, and uh, it's not the norm,
Yeah.
but it is a completely different technical problem to solve. And you can see pretty quickly how, when you look closely at a strategy like that, how you can improve it, and what microseconds of improvement could do. Like, that could mean a significant amount to the bottom line.
Hmm.
And when you get into those nitty gritty details, there's a whole different sort of world of technology that opens up that you could explore and might be worth uh, investing in. So, in fact, there's another group of traders that I work with, um, and they trade a strategy that where timing is of the essence.
Hmm.
I'm not going to go into any details about it, but let's just say that. And they're using Python. The uh, the important thing at this point, because we can see what the fills look like, we can see the delays, uh, converting everything over to C++. Now, C++ is right. It is the fastest language. It's like, right, you know, it's very efficient. It's built for speed. It's harder to deal with. You have to compile it. There's a whole infrastructure that comes with it. It's not as easy as other languages,
Hmm.
but it's built for speed. And that could be, that the goal would be shave a couple, probably 20, 30 microseconds, which would be enough to make the strategy significantly more profitable. So what we're doing is we're running two versions of this simultaneously in two different accounts, and then comparing the fills over a period of time. And it's pretty. This is like a very much an edge case, a very
Yeah.
higher level trader. Like the vast majority of the audience is not going to benefit from moving from Python to C++. I mean, that's just like,
Right.
if you're thinking about that now, it's a rabbit hole you probably want to avoid. But there are some strategies out there in some contexts where the cost benefit is absolutely makes the case easily for that.
Well, and so it's interesting just hearing you talk that it's any there there seems to be no clear answer for this, right? Because it's like each variable matters kind of independently. So I could see someone, for example, that uses you keep the strategy the same, you keep the back testing engine the same, and then all of a sudden you change the execution method from robotic to manual or semi-manual, or even a slower robot, and then timing may matter. But then if you keep the execution method the same, and the back testing the same, and the time frame the same, then it's the strategy that matters. So each individual component could either matter greatly or not a lot, as long as you line it up. And I think you kind of answered the way for the listener to know for sure is that testing, right? And we always talk about,
Yeah.
as part of probably one of the most time consuming, but I'd say one of the most important parts of systematic trading, is to look at, this is what happened in the real world, and then compare that back periodically to, this is what the happened in the backtest world, or in your kind of fantasy world, and then really align those differences. And depending on how how if there is a difference, you can start getting really specific with it and start looking at like the tape or the time in sales at the moment of trading and how much volume was going through and all that kind of stuff. But in most cases, what you're hoping is that you do your trading through the day in your bot, and then you run the back test at the end of the day in the bot, and you line them up, and they're reasonably close, and you go, okay, that's good. It's one of those you only really need to go crazy with it if you start to see sporadic differences. And what I would do is I would say just try to test the limits as much as you can. Try to get maybe not like Dave where you're up to a second for a trade, but just start trying to trade, in and out in a couple minutes or a minute or something like that. And as you get closer and closer, I think that's where you'll start to see whatever component of your kind of chain breaks and says, okay, now I need to go look at that. Again, the more you zoom in, that's where it will really show the flaws.
Yeah, and I'm glad you brought up manual trading because that's, we talk a lot about automated trading here, and we kind of gloss over the fact that we all started as manual traders, and
Yep.
that was it was such a huge, like, it was completely obvious to me that I was the bottleneck when I was doing that.
Hmm.
And you know, you almost can't even talk about timing or doing experiments like this if you're doing manual trading, right? You have to, like, this whole other world opens up when you do automated trading and you've got a robot sending stuff for you. But just because you instantly become uh, more like a scientist doing experiments,
Right.
and because you're not the bottleneck, you're not looking at your phone when the trade comes in, and then going to put
Hmm.
your order in or making the mistake. So
Yeah, you bought decaf coffee by mistake instead of right.
yeah,
Yeah, so many more variables as soon as you put a human in there that are really just uncontrollable, if not just incredibly hard to control.
yeah, and that's really, like, there's been a few turning points in my trading career where it was like before I did this and then after, like, I just completely changed the way I did things.
Hmm.
That's probably the most important thing, is automating the trades I was making. I mean, like, it's night and day before and after. Just the whole world's different, and I like, yeah, like, a very notable thing before and after that moment.
Well, and it was the first thing that I thought of when he mentioned timing, is because for me the turning point to get really kind of systematic with things is when I built strategies that just weren't physically possible for humans to
Yeah,
implement, right? And there may be people that are doing that now, and they say, well, how important is timing? And to me, that is the most important variable. If you're having a system trade for you, well, now we're talking about shaving microseconds, right? A lot of the stuff I do is even like inefficient through webhooks and everything, and it's still triggering in like half a second from when the signal is demonstrated. And you take that and you compare it out to what a human would be doing, you're talking 10 seconds or so, and God forbid you're in the bathroom or you're, like you said, looking at your phone. Now you're talking minutes. So if you just look at if it was where can I shave the most, well, you can shave seconds to minutes by going from a human execution to automated execution. And then everything after that, it's really starting to deal with the edges of things, and like, how do I go from a half a second to a quarter of a second, or where you're not shrinking your time on execution by 90 something percent. Now you're trying to shrink it by like an additional 5 or 10% here or there in either direction, right? Which can compound in the long run. But if you're not doing that initial 90%, then there's no need to even look at the other stuff.
yeah, and those small edges, they sound like, if you're coming from a world of longer hold times, it sounds crazy, right? It's like, wow,
Hmm.
that's, how could that possibly make a difference? But there are multiple situations where that can make a dramatic difference. And I think that the way that traders first notice it, and is when it's completely obvious, and that comes for mistrades. Like you
Yes.
were just
Yeah.
a little bit late, and you had this huge winner, then you're sitting on the sidelines because your order didn't get in fast enough.
Hmm.
Those are really these huge red flags that are completely obvious to see, and usually very motivating. I mean, that's the first time that happens, you're hurt. Like this is painful to experience this. So um, that's very motivating to, it can be demotivating, but traders who are in this for the long run, that is a completely motivating thing for them. And that's, that is fuel to improve, because when that happens, there's a lot of different things and a lot of different creativity that can come to your mind to improve that. And, and it's really clear to see what that improvement would mean. It's not theoretical.
Yeah, I use that as I think a great litmus test for whether or not the person at all is interested in becoming systematic. And the reason I say that is I know traders who every day I would hear from, oh, I missed this trade and I missed that trade and I missed this. Then they would just not do anything about it and then go into trade the next day. And
Yeah.
I'm like, okay, that's kind of, if you're just someone who's complaining about, oh, I had this brilliant idea, but I missed it, or I didn't get filled on this trade, um, and you're not doing anything about it, then you're probably not going to become a systematic trader, because you're right, that is probably the most painful thing that slaps you in the face when you look at that open order. And we did a whole podcast recently on whether or not you should cancel that order, but you see that
Yeah.
order hanging there, and in a lot of platforms it draws a line on the chart and
Yeah.
price was just there, and then it just rips, and you're like, well, damn, right? If that open order was a closed order, you very quickly become a mathematician, because you're doing the math in your head to
Yeah.
say this is the exact amount of money I would have made if that order was slightly faster. And then from there, that, you're right, becomes a motivation to say, okay, well, now I can't place the trade, I need a system to do it. And if the system's missing it, then the two things I look at is timing and liquidity, which was going to be the other thing I was going to bring up to this person, is that, if there is an issue, it's not necessarily timing. It could be liquidity as well, right? The signal could be getting there very fast, but then maybe you're misjudging the liquidity by using, last price instead of bid for your calculation or something like that, right?
Yeah. I mean, there's lots of things uh, to think about there. I mean, as you were talking, there's another timing thing that it made me think of. Uh, you know, when you review your trading, you should be doing that on a regular basis. You should be doing that daily. And because there's so much insight you can get from watching the trades in real time, and by the end of the trading day, going back and reviewing and coming up with your to-do list, like, was there any way that I could have done better today? What is there anything I can implement in the system to improve things so that today would have been better? Um,
And just so, right, the audience knows, just for the discretionary traders, I know they'll think what Dave's meaning is not, oh, I lost money today, what should I change in my system in order to make better? You're talking more about, there was a glitch here, or some sort of weird execution here, or the fill didn't match what the fill should have done, or something more from that technical side. Because we talked a little bit about that, but there's a lot of people out there who will just look at one bad trade or one bad day, and they're trying to get that out of their system entirely. But it's more about, this is what should have happened, and this is what actually happened. If what should have happened was a loss, and the loss carried through perfectly in the real world, then I'd say that's still a good review, and you need to review that. But just making sure that you're not looking at a bad trade, or a losing trade as a bad trade, right? It's like, did it execute perfectly, right? And then if that happens for the long run, then you need to go look at your system. But yeah, when you're observing as a systematic trader, it should be, how well is from the system to the real world, how well is all that executing?
yeah, and when you do that, what you're really doing is sort of taking context of your trading and keeping in mind and sort of brainstorming what are the most important things I should be working on right now. I think that's such a huge thing that a lot of traders just kind of gloss over, or they get overwhelmed because it's such a huge list.
Hmm.
But if you can get really good at prioritizing that list and recognizing what the rabbit holes are to avoid, and but also recognizing where the money is there and what to focus on, the better you get at that, the better you're going to be over time, and your improvement is going to continue to get higher and higher. So you're not just going to improve at a steady rate, at a a straight line, but over time that line is going to continue to get steeper and steeper upwards. So your improvement curve is going to improve over time. And traders and engineering types, software developers, they're really prone to over optimization, like looking at what are really cool technical problems that might not matter at all to your P&L, right?
Hmm.
So it's a really good skill to be able to recognize the important things, and it's very underrated. Like I, we mentioned last week the project I did with the Cruncher where I completely over optimized something. Like there was no reason I should have done all this work for this shopping cart thing for the Cruncher, but man, it was such a cool technical thing to solve that, like, and your technical minded people just like, oh, that would be so cool to do it that way. So it's definitely something to try to get more and more discerning about over time.
Yes. Well, it's the amount of time we have to work on things is really kind of all we have, right? So we need to make sure that you're focusing on that, and I do think that that's where a lot of people kind of fall a little bit astray. Um, I do it still, right? I still try to have a very focused list every day, but you can have so much, and that's another point when it comes to the timing thing, is you have to look at really, let's say, you think that timing is a problem. You should really take stock of exactly how much and whether or not that is the best problem to be solving at the time, or right, going and doing something kind of completely different with the same amount of time. Are you going to be 1% P&L return at the end of the year better if you speed up your bot just a little bit versus spending time optimizing a system or building an entirely new system that adds 10% P&L to your year at the bottom line, and then trying to figure that out, and you'll never know for sure. I think you get a pretty good guess if you go and start looking and doing this comparison of that cost me however much money because it was a little bit slower than I wanted, and so did this one, and vice versa. Because what may happen over time is sometimes being slow, depending on the strategy or the order, might not. It could be a benefit, right? I've had systems where putting out that limit order, and that limit order comes out a couple seconds late, and as I'm comparing over a number of weeks, I'm actually doing a little bit better. Like this
Yeah.
forced slowness is actually helping me, which again opens up a whole other set of questions and a whole other rabbit hole you have to drop down. So I think a lot of times, sometimes people may look at slowness as this is the thing I got to fix right now, but like you mentioned, it's just cost benefit analysis. Is this really the problem, or are you better working somewhere else and shoring up some other part of your trading?
Yeah, there's been times where a project comes to mind, or some technical thing that I would like to solve comes to mind, and then maybe I'm too busy and don't get to it, and then I look back and think, wow, that I'm glad I didn't do that, because I've since then I kind of mulled over it, and I've found that it was completely unnecessary, or I
Hmm.
found this other way that's just way easier. So we talk a lot about uh, being in a hurry being bad for trading. Almost any scenario. If you're in a hurry, if you're in a hurry to make a lot of money, if you're in a hurry to make a trade, like you're in a hurry to go live and scale up your strategy, it's usually a bad idea. And that this is a good scenario where, you know, you shouldn't be in a hurry to do something, like mull over it. And oftentimes you'll find some way easier way to do it. Certainly for really big technical projects or something that you, especially if you have a technical brain and you're prone to these rabbit holes.
Yeah.
A lot of times being sort of lazy about it and waiting a little bit, mulling over it, can give you some inspiration for different ways to do things.
So we know how the person kind of figures out whether or not it's a problem, right? We already mentioned that you run, what should have happened versus what happened, and then you see if that's a big kind of bottleneck. And we talked about deciding whether or not it's important enough to work on. Uh, but just to give some kind of practical advice before we end it, let's say both those check out as true, right? He has a system and through Amni Broker or whatever it is, and it's generating signals, and that those signals are late, and that's making his real world test versus his back test really misalign, and it's costing him a lot of money. Where are just some good places that people can start to look for the problem, right? Once you've determined that, yes, it is a problem, yes, it's something I have to address, and using that stack, which I think would be a pretty common one, from Amni Broker as the back tester to the executor to your broker, along that line, where kind of the best places someone could look.
Yeah. So the problem with these scenarios is sometimes it's, maybe you can't look at one day's worth of data and really get the optimal answer. Sometimes it
Mhm.
takes many days to be able to look at it. So what I suggest is really breaking down your entire workflow, like the entire process. Like, here's the step that has to happen. Once that step happens, here's what has to happen, etc. And especially if you are doing coding and have control of the code, you can add logging uh, to write log files for each one of these steps. So it's gonna write the timestamp. It's gonna write the minute bar that it took the trade signal from. And then you can go back after the fact. You're not, emotions are out of it. You're looking at these log files, and you can put timers in there to measure the exact delays at each point. So then it becomes really easy to narrow down exactly where the bottleneck is, or in fact, where the biggest bottleneck is. There's going to be
Mhm.
tiny bottlenecks along the whole way here, but some of them are going to be negligible. And a lot of times this, putting logging in place, letting it run for a bit, and seeing where, over a large number of trades, where the delays are and where you can get, um, where you should focus your efforts to reduce the delays in the process.
Yeah, because I think that's got to be the biggest part. Is if someone is determined that it's a big problem, the frustrating bit would be, okay, how do I solve it? So I think that just little piece of advice would probably get people moving in the right direction to say, okay, for you just got to go through and have these logs and make sure that you're tracking that correctly, because as soon as you find the problem, I'm assuming, as someone who's not a coder and use a lot of off the shelf options, that then becomes just much infinitely easier to go and kind of pinpoint and solve. Now, um, say someone doesn't have, because I was looking at that and saying, well, man, that would take me a lot of work to do. So someone doesn't have those capabilities. Where do you normally see it? Because I just, could see people saying, oh, it's my internet, I need to upgrade or something like that. Is it usually that, or is it usually in the code you use, or do you just find it, like, is it usually on Amni Broker side, or is it usually on your broker side, or where do you normally see that there's the biggest kind of lag from idea to kind of execution there?
Yeah, I think it depends on the strategy, and a lot of these problems can be solved by just using a different order type. Another underrated thing that traders could do is get better at looking in at and understanding time and sales data.
Hmm.
There's a lot of data there. Most trading platforms provide it. Your broker probably provides it. Get good at looking and interpreting that data and understanding why your order didn't get filled, what order type you could have put in place that could have gotten filled. What would the price have needed to be for that? What kind of order could you have put in place that would have gotten you a fill on a trade that you missed? That's a really good skill to have. And I mean, these are nitty gritty details. I mean, that should probably be the title of the episode, nitty gritty details, because you're going to be, and that's what trading is. A lot of times it boils down to very
Hmm.
detailed studying of information. And if you're not comfortable with that, then you're gonna struggle.
Well, and that leads to my point earlier about how quite often I would say a lot of people look at delayed things and it's actually a liquid, right? So it's not that your orders. So when you're doing the tracking that you described earlier, you do the tracking all the way out until the broker kind of put in and that order is in there and confirmed. Because if that's happening at a decent time, then you're looking at the other side of things and saying, okay, is it a liquidity? Because just from my experience from trading with a lot of people, they say, or kind of mentoring and doing that with other traders, is that confusion happens a lot. I think, especially if people kind of jump right into systematic trading and they haven't actually been trying to fill orders kind of manually on their own for any period of time. So they look at that and they say, "Oh, my system's awfully slow," and then it's not slow at all. It's just you're putting out a limit and you're the only guy out there bidding and the stock doesn't trade very much. So
Yeah.
the market runs away from you because you're the only you're the only dude in the stock. And a lot of that can be solved in different ways, and I'm sure that's just completely different podcast. But I think separating, right, whether or not it is slow or whether or not it's a liquid, I think that's a really big deal.
Yeah, and sometimes those problems blur a little bit
Yeah.
and cross over. Um, yeah, and there's different ways to solve that. But the important thing to know is solving that problem and coming to the realization of what you just described, that okay, wow, the stock's just a liquid,
Hmm.
so there's no way I was getting filled no matter how fast I am. Those kind of realizations and understanding that deeply not only can help you with the strategy you're trading now, but those insights can help you think more broadly and come up with perhaps a whole set of strategies that exploit that insight. So these are, it may seem like a boring uh, use of your time to go dig into this, but a lot of times there's some real hidden gems in there that open up the possibility of completely new strategies once you dive in and figure out exactly what's going on.
Yeah, and I think that is a good idea for a podcast. I think every episode we say we got another good idea for a podcast. Is a lot of people don't look at that as, I think, the advantage that it is. Sometimes the illiquidity advantage. It allows us to play in playgrounds where we're not competing with Goldman Sachs and Citadel and all these guys because they're just not interested in those worlds. So that's one to look at. So as always, I hope this helped. I think you got a pretty good framework on to figure out, if there's a problem and try to figure out where it is, if the problem does exist. But again, another good one. We always love the questions, right? They always lead to very thought provoking episodes, I think. But as always, I'm Michael Noss.
And I'm Dave May. We'll talk to you next week on Line Your Own Pockets.